Hey traders, Nick Shaheen here, looking at something that comes up often. People have these debates all the time. Headlines matter, headlines are noise, turn off the news. I believe that if you turn off the news, if I turn off the news, it will affect, I would probably be a better trader because I would make fewer mistakes because of the noise out there. You're saying a lot of people out there are convinced that they need to listen to CNBC and find why the stocks went up, why the stocks went down, why there's a rally, why there's a spike. You're chasing headlines, you're going to make mistakes, I guarantee you that. So headlines don't matter. This is the point of this video. And I'm going to prove it to you. Something just happened in the pre-open. The market's still closed. It's about 6 a.m. Pacific. They opened about half an hour. And, the S&P futures were unfolding in one way, and then we had something happen. And I'm going to use this 5-minute increment in order to prove to you, or to make my point. I can't prove to you. I can just present my point of why headlines don't matter. Very few headlines do matter. The ones that actually change the game matter. For example, Stamps.com changed its business model. Well, that's a headline that matters because they decided, you know what, we don't want to be in the business of stamps or something like that. So that headline matters. The PG&E headline matters. But most other headlines, this little report here, this little report that, what someone said, what someone tweeted, what state media said, they don't matter. Okay, I'll show you. This is an example. This is what actually happened this morning. I'm going to bring in, this is the S&P E-minis pre-open. So the market's closed, 5-minute candles, okay? And we were down about 0.25% in the S&P. We were coming back up, and right here there was an opportunity, right here to be specific, that if they could beat this neckline, this candle should come. So that would be the trade. If someone is actively trading this chart on a 5-minute, they want to catch a few points in the S&P, they would buy the breakout. And this is where they start thinking, okay, I'm going to start to trim or put a stop. Why? Because there's a huge cluster of supply right here. And there's this little candle right there. So clearly, I know that if this breakout happens, I don't care if this is 5 minutes or 5 months. I don't care. This is going to be resistance. It cannot be butter. Very rarely do we come up to an accident scene. You can consider that an accident. We fell from here to here. And we come back to it and just go through it like butter. Very few times that I've seen. So then, if as soon as this candle comes, it came quick for whatever reason. I'm sure you can scour the news and find a headline. And then right here, guess what happened? A, quote, headline came out on retail. And retail sales was somewhat disappointing. It was down 3%, not 3%, 0.3%. And they were expecting up 0.3%. But if you take out gas and whatever, blah, 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 blah. So sell, panic. Everybody sell. So I expected a red tick right there, headline or not. The headline came out. So what the headline does, it expedites matter. It expedites the price action that was going to unfold anyway. If you didn't have the headline, this would not have been another big green candle. It would have been a chop to try to break through it. Usually when the bulls go up to a line, a neckline, they drop like this, they come to it, they go above it a little bit, they come back to it, they establish it as footing, and then they go about their business. That's how breakouts happen, normal breakouts happen. So the headline might expedite matter and maybe exaggerate the move a little bit, but it doesn't matter. The price action is going to unfold any which way it's going to unfold. This is more true that I read a statistic that like 80% of all trading is done by machines. So they call it AI. I call BS on that. It's not AI. They're not out there. They're just executing on a program a lot better than they used to. So, and learning as far as price action, but they're not learning new skills on their own. Like they're not deciding they need to learn new skills to come do this job better. They're doing their job that they've been programmed to do a little bit better than they did before or yesterday. So anyway, if machines are doing all the trading, then machines repeat until it doesn't work. So the expectations in the charts are now even more predictable than before. So if this argument, if someone is making this argument 10 years ago, it's harder to tell somebody headlines don't matter 10 years ago than now, okay? because now it's all machines, and this price action was going to happen anyway. I'll prove it to you. So if I fail here and I fall, I should probably fall into the last best support, right? So this zone of time, hello, has this red line. This red line is the point of interest. From a volume perspective, volume profile perspective, if you know what that is. If you don't, you should study it. This is where bulls and bears, I shouldn't say that, buyers and sellers agreed most this morning. And guess where it falls to? Exactly to that. Coincidence? I don't think so. It's just the price action unfolding the way it unfolds. All right, if you think about it, this is a big cup. They're working on a handle. And then the decision will become later if they're going to break through it or not. Maybe they fail one little time, they go above it, and then. So mark this, okay? Test it. Maybe this unfolds, and we get a rally about this big today. So 320, what is that? I'm estimating. Say 290, 310-ish. If they get the 311s, they can run higher for different reasons. But to this point, this price action is probably building a cup and handle. And it's not a coincidence that they fell into the POC. Retail sales or not, this is the proper price action for this morning. Nick signing out.